Welcome back. The 1 hour in the market, the only one you need to make money. Tesla's case in point. We're going to get right into it. I appreciate the understanding of the delay. Had a few things come up and didn't want to shortchange you guys, so we wanted to make sure we could still get in that full hour. So we scooted it back a little bit. Got some great charts to cover: Tesla, Nvidia, AMD. We're going to cover them all. We have an exciting announcement for you regarding our Friday stream, which we'll get into. And then we're going to play a little smash or pass where you guys give us the tickers. We look at the chart and give you a mash or pass, really hot or not. Talk to you about it, so that way you guys don't go long in positions that are absolute water garbage, water trash, and we don't want you to do that. So let's get right into it with Tesla. I mean, absolutely ripping. I'm going to get this chart going here. We actually closed. Did we close north of 250? Correct?
Yeah, 252.
252.
270 is next. I cannot wait.
I couldn't agree more. I think that for those of you that were deniers of the truth as it lies, we'll reap what you sow. We gave you this one at $140 a share, so right off the lows, literally the most local relative bottom, and probably the last one you're going to get. I feel pretty confident in saying that. As we are ripping back to 260 plus, 278 being the following target. Absolutely explosive price action, completely like violated descending resistance, meaning this thing is just like ready to go. But most importantly, to draw your guys' attention, we talk about volume a lot. Look at that, those big daddy boomsticks coming in. Just to give you a taste, just so you know. That Daddy Elon means business right now, and we're pushing all of this up against the Robotaxi event. How are you feeling about that?
I think it's justified because nobody's talking about the monster that's like under the hood for Tesla, which is the energy business. It is going off the radars right now. Like if you saw the numbers that they reported, I think it was a week ago, like when they report the deliveries, etc. They also report the energy storage business, and it's bonkers, those numbers, like just quarter after quarter, like how it caught everyone off. Everyone was surprised, just to say that. And if you guys know, I've been saying energy is a really interesting angle to capitalize on the AI thematic, because the amount of resources required to like fund this thematic for the next decade in AI, there has to be cheaper energy alternatives. The energy storage business is essentially the step one of that. And Tesla's just firing on all cylinders on that front. And that's going to be, even if the delivery numbers miss on the top line and revenue is like a little lighter on the vehicles, I do think the energy storage business will pick up the majority of that delta and essentially beat. That's kind of why it caught a bid since a past 2 weeks, was mainly like the energy business is, whoa, nobody, even the most aggressive analysts on the street, did not predict the energy storage business succeeding as it did the past couple quarters, couple months. And now you're also seeing some kind of more rumors get sent out there of FSD. They might have a $1 billion run rate already right now in the FSD technology. If that's the case, holy moly, just because it's been less than a year and it's already at that run rate, that's open AI bonkers numbers on a run rate for something that just technology within a year of just like, wow, already $1 billion before it's even commercially scalable, really. That's crazy. And that's like, who knows, like if that was an inflection point, that justifies it, that $1 billion run rate. And that's with software margins of 60% plus. That's going to be pure earnings expansion story for Tesla, combined with that energy storage business just flying off the shelves as well. And the EV industry will be recovering, because right now we're factoring a September rate cut. Once rates start getting cut, I do think consumers will start being more aggressive towards purchasing vehicles after 2 or 3 rate cuts. And now the EV side of their business will be flying as well. Perfect storm of all three fronts.
Well, did you also see this news I just posted in the chat that they entered that purchase list in the for the Chinese government? Like they're the first, I believe, foreign automaker to be placed on that list, which is like insane.
I mean, do you guys remember when Elon just jumped on a plane, went across the world to talk with Z and just finalized that FSD agreement overnight? Essentially, no other CEO in the world can just, I don't even know if Jensen can do that in China. Only Elon. And obviously that meeting went well, and there's gonna be future partnerships. That's why, like, there's a rumor today I saw on the news terminal about Buick maybe licensing FSD technology. Like, yes, Buick is a part of the GM family, and they have a huge presence in China, so that could be true. Like, I didn't see any additional content to validate it, but I do see China just being the first, the guinea pigs of the FSD technology for a nation because of how condensed everything's just so condensed there, and it's a lot easier to kind of pass the barriers of entry on their kind of economy and governments on doing revolutionary tech. Like, you're seeing with eVTOL with EHang, like they're way ahead of the Joby Aviation stuff because their government's helping them out. Like, there makes it easier for innovation to succeed in China because the less loops you have to like go through to get to that launching point. So I wouldn't be surprised if there's more news on FSD technology in China in the coming weeks or even weeks leading up to the 8.8 event. Like, there's also rumors that Travis, I'm blanking on his name, the old CEO of Uber, was going to be head of the Robotaxi.
Travis Kalanick.
Yeah. Elon debunked that rumor, but I think it's kind of like, first off, that pay package would be absolutely nuts. And I don't know if I want that as a Tesla shareholder, just like millions of dollars towards the head of a division. But I do think the Robotaxi is going to be an eye like opener in like a month from now. And if that becomes more of a reality, I didn't even add the Robotaxi element or Optimus element on why Tesla's firing on all cylinders. Like, it's kind of insane how many secular growth themes that Tesla is a leader in that they have just tipped their toes in. So that's why it's like, it's running because of the FOMO. It feels FOMO, but it's not, because retail can't be moving a stock like this at this like 40% move in less than 2 weeks. That's not retail. That's institutions accumulating a stock like this. And this game is a little rigged. I hate to say it. And they have knowledge towards information that us as retailers don't really have or aren't privy to. So I do think, like, follow the money, follow the price action, and just know the ceiling on Tesla, because it wouldn't surprise me in like 5 years Tesla is fighting for Microsoft, Apple, and Nvidia as the most valuable company in the world. And if that's the case, this is a freaking like 8x. It was a 10xer 2 or 3 weeks ago, but now it's an 8xer. Like, there's still a ton of runway. So again, don't view valuation as like a necessary component in your investment in Tesla, because you're being too short-sighted. I agree. I'm a fundamental investor. It's just, you can't think of valuation with a name like Tesla because there's just so much exposure and so many secular growth themes in early innings that you have no idea what the potential is. And you don't want to miss out on the next Nvidia based on, oh, it's a little pricey on a PE ratio. That's just absurd.
Those aren't even real numbers anymore. I feel like no one cares. We're so disjointed from reality that it's completely and entirely irrelevant at this point. The market is irrational. So let's get to this question by Nikhil. Hey, Shay, when you taking some profit on Tesla, any price target? Well, like right now, your cushion is significant. You're up 50%. If you took this trade from when we start talking about it, your critical levels that we've discussed time and time again was 203 to 266. That range is just got cleaned out. I mean, we're $5 shy at this point. So call it a win. It hit. Our targets that we laid out were 231, then 245, and then 266, which I still have a high degree of confidence it'll hit. You can see this bullish engulf here. Like, sellers tried to push down and just had zero force. Thinning volume, I think, kind of teetered off end of day. So we didn't see another huge move. See what I mean? The Chag, my guy, up 56%. That's what I'm talking about. We've both made significant. I mean, you have a pretty significant allocation here on this one, don't you?
Yeah, I mean, first off, Chag and I have the same cost basis because I'm up 56.2%. So it must be the same. But yeah, I have a 10% position. And to answer your question, Nikhil, I'm not selling. I am a firm believer letting your winners win and let them do their thing. Why would you want to? Like, I get the idea of like wanting to trim because it's moved up 30+% within weeks and feels very FOMO-y, feels very squeezy, and you just want to protect yourself or your gains. As a long-term investor, which I hope a lot of you are if you're tuning into this every single week, you don't do that for these winners and these highly secular growth themes. CrowdStrike, I'm up 201% on it. It's a 15% position for me. I'm not trimming. Why is that? The valuation is really high, in my opinion. They're validating my thesis that they're going to be the tier 1 cybersecurity platform for all enterprises, in my opinion, in the end of this decade. Every quarter they validated that, and the price action is showing it. So why would I trim if that's my belief in the company? And if AI is going to generate a ton more code in the next couple of years, what do you have to do with that code? You have to protect it. And cybersecurity is the stickiest component of any IT budget that, as a CTO, you will not cut short of to save a couple of dollars or find a couple of changes in the couch. You won't. So I'm keeping that. Tesla, it's been basing for years. I luckily just got in at the end of last year once I saw the AI and software vision of it. So I haven't been holding this position for years, frustrated. I got in towards the end, which is dumb luck. I fully agree. It's absolute dumb luck that I got in when I did after the years of basing. Or maybe it was, I don't know. I'm going to put it dumb luck. But Tesla, if I think, which I've to my core, I believe they're going to be a top 5 company on valuation sometime in the next 5 years. I'm not selling right now when they're worth 750 bill, when the top 3 big most valuable companies are worth 3 trillion plus. Like, ton of runway. And I do think there's a high floor on a stock like the Tesla because of that energy storage business that's obviously hitting on all cylinders, and their EV business is turning a corner. EV industry is turning a corner. The worst is behind us. So I think right now is the optimal time. Like, you're seeing a breakout in space finally. Yes, the 8/8 event could be a sell the news catalyst if Robotaxi is like not really there yet. If that's the case, maybe it pulls back 10 or 15%. But again, it'll zoom out. We're talking 5+ year investment. That's going to mean nothing. And you don't want to lose out on, let's just say Robotaxi was a reality and it actually became like, it's going to happen commercially in 2025, 2026. It's going to run up a ton. And you trimming from 250 to protect yourself from 250 to 220 when it might be at $800+ in a couple of years, you're going to feel tilted. Like how I feel tilted about selling NVIDIA pre-split at $600. Like, I feel tilted.
And he's right. So if you do zoom out, I mean, this is the thing to stay focused on. Okay, look, we got this chart here. We've mapped this out time and time again. We have in front of us, what we're staring at right now is the beginning of a 193% move to the upside from our entry, right, which was at 143, 144. So and just for full disclaimer, like my cost basis is like total 165, I think, from all in, added all on Webull, and then my other one is like 101. So if you see differing screenshots, I have it in 2 portfolios. I have my long-term retirement account, like your Roth, right, your SEP IRA if you're self-employed, and then I have my swing trading account, which is where I will trim a very significantly small portion, as he said, just like NVIDIA, right? Once after split, I think in my retirement account I have 300 shares. I have 1,000 in my one account. Just it was like unfortunate the option was in a different account, is what it is. The other one I have 300 shares. I had 330. I sold 30 of them. That's it. I had 330 shares. I sold 30. Just put a little cash in daddy's pocket. Also, I wanted to buy some more Tesla and I wanted to buy some more snow. So like, it's all about that rotation. Am I going to continue to see? So for instance, I think this is this one case in point of why we talked about, I guess if you look at this, if you guys zoom out in total, right, and look at the stream that we do for you guys every week, week in, week out, I encourage one or some of you to focus on like what names do they talk more about? Like how does the time get allocated to the stream? You can then see exactly where our interests lie, right? So notice, surprisingly, not surprisingly, 20 minutes of this has already been allocated to Tesla, which we will move on in a second. But think about that now. We're 2 people. We're just geeking out over this shit and sharing with you what we're doing for our own money. And if we're also spending 20 minutes of that time talking to you about one trade, I would venture to say that we've put in some time to know that this is the one. Like, I want everybody to know we're talking about this so we can slap them in the face and show them how right we were and tell them that they missed out and hopefully get them to start paying attention so that they don't get left behind in this market. Because you got a couple years left to really make a name for yourself. If you don't, it's going to be very difficult. Mm-hmm. But what you have in front of you is the move we mapped out when this was trading at $140. 193% upside from there puts us at $273 price target. That would be a test, not a final price target, but a test. In my opinion, that's leg one. When we get there, it will be glorious. It will be amazing. And sorry, it's not. It's a $273 move to the upside, which puts it at about $418 a share, excuse me, which is testing our previous local, or not local, but our previous all-time high, which is at about 409 post split. We're going to see that again. Now, where we go from there is, as Shai's talking about here, it's like 800, 1,000. Is that out of question? Absolutely not. So do I want to be trimming 10? If you like, think of it, if you got 10 shares, you want to sell 20% of them when they have a very significant chance to be worth double what they are now in less than a year. Like, if you need the money because like medical expense, like that's different.
That's a different story. We're talking about money that you don't need or you just don't touch.
But like, if this is sitting and waiting, this is it. So Tony said I trimmed today. Guess I shouldn't have. Wrong. Look, our outlook is this is money that we don't need liquidity. We don't need this liquidity, right? We park it, we sit, we watch, we wait. Mm-hmm. If you have an active trading account that you generate like living income from, like, dude, you trim some, you trim some. It's entirely up to you. Like, we talk about this all the time. I'm going to put the link at the bottom. For those of you that aren't in, you just need to get in the Discord. Like, let's build you a trading plan that makes sense. It's jump in there. It's free to access. There are free and premium features, but just use the free shit. Don't spend any money. Use the free stuff. Let's build you a trading plan because your life needs to dictate how you take these trades, right? In that sense, it's not about, we talk about this all the time, dude. I mean, everyone has their own unique outlook and their own circumstances, right? That affect how they do this. We talked about it last week. If your circumstances require you to make a different decision than what we're talking about, then that's the truth that you need to stand on and stick to. But you want to also investigate it enough to make sure that it's the right decision for yourself. We can't tell you what to do. We can tell you what we're doing and what we think is probably the best move, generally speaking, for someone in our position, a similar position. But if this is money that if you can park away in the couch, which is what I've put into this, I'm not touching it. If this is money that you might need for a car payment in 6 weeks, I get it. So I think it's all about defining, okay, I have this much time to let this money sit. Because if you don't understand your time horizon, you're going to kick yourself on every trade, right? NVIDIA was one of these positions for me. Had it not been, I would have done the same thing. I would have sold $600-700. Absolutely. But I just kept saying to myself, you know what? I don't need this money. And I had to tell myself that every day. Because then I hit 1,000 and I'm like, oh my God, I don't need this money. I don't need this money. I don't need this money. And wait. And then, once you get there, you get there. But yeah, please get in there. The link's at the bottom. It's free. You guys go to Shai's. You can also go to Shai's Twitter, Stocks Heavy Shay on X. And the link is in his bio to join the inner circle. I would also get in there because that's where you're going to get the deep dive research on these picks. You absolutely need to get in there because we got some hot stuff coming for you. I guess there's no better time than right now, right before we get in the next segment, which we're going to look at NVIDIA than AMD. Our Friday stream, as you guys know, we've been doing this twice a week for quite a while now. And if you haven't made money here yet, then it's just because you didn't take the trades. It's not because they weren't there, and that's fine. The Friday stream is going to be moving to premium only. It's going to be moving to the premium section only. We're going to feature a little more live, in the moment, actionable trade ideas. We're going to be giving you like the deep dive into the Tesla chart. We're not just going to talk about the company, talk about the chart. What's our positional entry? Is there a secondary entry? Where can we re-enter the position for those that are more active traders? Everything and then some alongside, which I'm very, I don't know if, do you want to announce it? Because we're about to put the links out there.
No, you do. I love it.
Well, the man, the myth, the legend is going to be teaching you his secret sauce for the first time ever, available exclusively. You can have this handsome bastard as your coach, walking you through how he does what he does, why he does what he does, what trades are actionable based on what he knows and what he does, and ripping the cover off the ball right alongside you. The goal is for it to be over-the-shoulder view. You don't miss a thing. A weekly live session detailing those trades, detailing that strategy, breaking down the core elements that are way too granular for us to get into here. You're going to be getting those in a very small group setting. Absolutely phenomenal. We're going to be putting that link out very soon, so just keep that at the top of your mind. But alongside that change, we will also be moving this stream to premium only. I'm going to have a free trial link coming up here soon, and we will be releasing that for everybody. So you can just get a taste of what's behind the beautiful gold curtain. I promise it's just more money for you. We wouldn't be doing it this long. Wouldn't have over 11,000 students at this point that have gone through our program if it wasn't at least awesome. So I'll just say that as we move on. So let's talk NVIDIA here. I mean, this chart it's picking right back up where it left off, man. I mean, I think that we're in a privileged position here. If you look at this chart here, we're going to flip it over to NVIDIA. I mean, come on, look at that. That's just still blows my mind. We gave that one to you right here on the breakout. So technically we gave it to you at $20 post split adjusted price as it went to 128. So there's that. We've analyzed the trend a little bit. As we talked about, this is your main pivot point, right? This is where NVIDIA became a bullish monster, not just a bullish trade, but an absolute behemoth. As you can see, we consolidated, then we tested this resistance right here, and then we finally broke it. As we broke it, for those of you who don't know, what once was resistance, once the price goes above it, it becomes your new support. You need it to stay there. We are seeing that happen right in front of our eyes, testing our next, I would say, our big point of contention, which is $140 a share. That is going to be a difficult point, I think, for this chart to pass. But once it does, I mean, 200 incoming.
No, yeah, I mean, first off, they're reporting in like less than a month, I think, their earnings. It's gonna be business as usual. It's so funny because NVIDIA's turning into a story stock. What do I mean by that? AMD is a story stock where we're saying that they're going to catch up to NVIDIA in the GPU market. High tide result boats. NVIDIA will be a powerhouse, not same level as NVIDIA, but same category potentially. That's all story. We're not seeing the proof of it yet. Right now, NVIDIA, there's a story saying like, oh, they're losing. Their supply has finally met the demand. There's no more pricing power. There's going to be margin deterioration because the supply and demand are now leveling out for the first time in 2 years. This is the other end of that story. Like, we're not seeing proof of it. And until we do, the previous 3 quarters have justified this price action and just going up over 100%. I think we're going to get the same story again this upcoming earnings cycle until I'm proven wrong. If I'm proven right, this hits 150, and I think we're going to have an insane Q4, in my opinion, the market, the way it's set up, the market rally this year, the way it's going. Like, we're going to have a crazy November, December. I could see a world where NVIDIA hits $200.
Travel numbers? Did you see the consumer travel numbers?
No, it's just off
the consumer travel numbers for this year. Dude, they beat 2019. They beat pre-COVID.
No, we're firing all set. Like, yeah, it's weird. It's like the economy is a lot stronger than a lot of people assumed. I have no idea how, but that's just the way it is.
We've talked about this with everybody. Yeah. The bottom is falling out. If you're at the bottom of the ladder, you have been systemically impoverished and put down at a level even below where you once sat, socioeconomically speaking. The middle, however, has divided as well, which is like, this is where it gets really interesting. The middle has divided. The lower half of the middle has sunk down, right? Whereas they once were pretty stable and secure, I would say, in their ability and their purchasing power. They're now dropped off. It just raised that upper echelon of the middle, and then obviously the ultra wealthy just took a 100x return on the last couple of years. But the middle, you saw a lot more quick movers. I think last year they said more new minted millionaires earned money were created last year than ever before, meaning people who basically started up probably a digital services business or a digital products business, scaled it up, and became a millionaire. Not net worth property considered, but new earned income. Because there's very different. Like, you can inherit a house and all of a sudden your net worth's a millionaire, but you're not a millionaire, right? We're talking new earned income, millionaires. More were minted last year than ever before. And I would argue that this year will be a continuation of that trend. I think the upper 10% is just going to continue to go up because those are also the people with the hard and soft skills, man, that understand how to use these applications, use these technologies, leverage them to scale their efforts while also spending more money or spending less money, excuse me. and just continue to grow their businesses, their portfolios, their real estate holdings, whatever it is, fill in the blank, they've done better and will continue to do better. And so like, that's why at least from, I'll let Shay speak to his own opinion, but that's why I think hot names in the market will just keep going, because that bottom 40% isn't investing anyway. They never were. So nothing has changed there except for the fact that those that have money and have continued to invest over the last decade and have moved into the market now have more money. So where does it go? I would argue real estate, stock market, real estate, stock market. Real estate market is what it is. Stock market, much more accessible, far fewer barriers to entry. So my thinking is like dirt to dirt, like power of Sherlock Holmes and deduction. Where does it go? Where else does it go? Do you agree, disagree? Like, where else does the money go?
No, I mean, smart money, like anecdotal evidence. I'm around my friend's family. Like I grew up in Calabasas. That's a very affluent area. I'm surrounded by those type of people all the time. Smart money, to fight inflation, you have to invest. Absolutely, you must invest. That's the best way of fighting inflation.
Right.
Higher for longer. That's what they've been doing. And it's continuing. The delta is getting wider and wider because unfortunately, the less income folks, they're just living off the credit, which is eventually this is going to deteriorate, unfortunately, where the rich are getting richer and they have to invest to fight inflation. But with the supply being so poor, real estate, what's the next alternative? It is a stock market. And of course, it coincides with a massive once in a lifetime thematic like AI that just like fell on their plates on top of all this like craziness of like wanting to fight inflation. Where can we invest? AI is like just starting, and obviously the big tech is going to be the biggest beneficiary. So it's a defense play and also the AI thematic play. They're flaunting towards it. So I hate to see it and I hate talking about it because I think it's really unfair. But it's widening the top 10% and everyone else. Like it really is.
That's why it's free.
Yeah.
So this is the point. You guys, I hope you're grasping this. Like if you're in that bottom 50%, like let's get you the hell out of it, because you're not gonna be able to sustain a decent life worth living there. You're just not. And at the end of the day, like income inequality is what it is. I mean, it's difficult because I feel like a lot of it is where you're born, how you're born, what color you are when you're born, what family you're born into, what your education. I mean, you can go into a million different reasons. And I definitely was I would say a beneficiary of growing up with parents that they broke it out. My parents both grew up very differently than I did, right? And they gave us the life that they always wanted. So like I got to give them a lot of credit. Without that, I wouldn't even be here, understand any of this stuff. My dad talked to me about the stock market when I was like 8 or 9 years old. So I've had that somewhat of an exposure for a very long time. And I think that if we can start educating people earlier on, or it doesn't even matter if you're 50, you can get started. Like, I don't ever want to hear that bullshit. Like names like NVIDIA and Tesla, like those were 10K to 100K plays, right? So like you can't make any argument that there isn't still opportunity to make a material change in your life. I think the key here is just doing it with a systematic approach that you're comfortable with emotionally, because trading to me is like, it's one of the best forms of self-mastery you can focus on, because you'll learn so much more about who you really are based on what your habits are with like spending, living, what you eat. Like you'll learn a lot about yourself if you really dive in and analyze this stuff. And I'm sure Shay will test that. You are a financial analyst. Like you're much more of that than I am. Like you understand deeply what a company needs to do, what the numbers need to look like, et cetera. And so like even on a personal level, the same formulas apply. Like there needs to be an allocation, like with my kid, for example, right? He gets his allowance. I want him to 25% of it should be invested in something, somewhere, somehow. 10 to 15% of it should be given away. I believe donated, do something cool with it, help somebody out. The rest of it, put it in your savings and split that 50-50 with checking savings, right? Like spend a little bit, save a little bit, invest a good amount, give away some. Like if you follow that same philosophy in your portfolio, right? What are the names that make the most sense as from a savings perspective, right? Like your long-term dividend generators. What kind of names make the most sense from, okay, how do I turn this 20% of my portfolio, which say it's $200, into 500 because I want to go to a concert in 3 months? Like I personally would rather keep it invested and deny myself those wants, but like you also have to live a life that you like living. So if this is a means to get you to that concert you want to go to, or that trip you and your friends talked about, or just shit, a nice dinner every once in a while, then let's figure it out. Because these names, he talks about it when he says thematic, what he's saying is like there is something greater than us happening right now. That if you don't capitalize on now, you're going to miss the entirety of it. And when he says thematic, he also means it's not just one name, it's not just one company, it's not just one person, it's a number of them, which means your chances of hitting the bullseye are much higher than they would be in 4 or 5 years from now when you have to find the hidden gems. Like right now is a privileged time that I don't think you have to do as much like mining and uncovering for these hidden gems. I feel like they're a lot more in your face right now if you can open your mind to see it. And so, like, when we look at the NVIDIAs, like, dude, I mean, the chart speaks for itself. Clearly, the market loves it. And, like, let's talk price targets now. Like, we're going to test 140. After that, 200's on the radar. So just knowing that, okay, look at these lines. Whether you understand technical analysis or not, it's irrelevant. We'll turn Stocks Buddy on for you. We're on the weekly chart here. If you don't have Stocks Buddy, just Google it. You'll find it. It's phenomenal. One of the best indicators in the business. It shows you the bullish signal, the second one that happened, right? It gave you the first one at 44 bucks, gave you another one at 89 bucks. It auto calculates your stop loss. So basically it's telling us that if NVIDIA can stay strong above 118, the trend should continue. If it breaks below 118, the trend changes and you get a bearish signal. So then you know. And simple tools like this you can use if swing trading is more your thing, or if you don't want to necessarily hold something for so long, but you flip to something like the monthly chart, and the buy was given in NVIDIA right when we gave it to you at 14 bucks, and no sell signal's been given yet. So fundamentally speaking, it's still going. Technically speaking, it's still going. From a media perspective, it's still the darling. So if you miss the first run, who gives a shit? Get the second one. There's 5-10 other names that are set to benefit. That's what we're trying to tell you. I hope I explained that well enough. It's like my point here is like, don't get caught up on missing the one. It's like we've been doing this for years now. Like, because I used to feel like that, but like I realized that we stopped counting 100% with runners. We just stopped because there were so many. It wasn't like a valuable metric anymore. It's like once you have 40 or 50 of those, it's like, what's the point of counting? Like, let's just focus on overall average return because that's what really matters at the end of the day. So I think that this one in and of itself is a wealth build. I mean, it already has, but I think there's a continuing. Let me ask you this: do you think the psychological impact of the share price kind of sets the table for where the company goes if they just continue business as usual? Like people saw this at $700-800, like they split the stock, right? So for those of you that don't know, they basically took 10 shares. Or sorry, the other way around. They took one share, split it into 10, right? Which means the price of each share goes down, so it's more accessible for people to invest in. But we are used to seeing this at $300, $400, $500, $700, then 800, then 1,000. Do you think that those memories kind of imprint and it kind of also kind of shapes the future of what we see? Because I do.
I think to a certain amount of retail for sure.
It's retail.
Retail, yeah.
They're not looking at on par valuation. They're looking at NVIDIA's trading at this.
Exactly. Like I forgot who talked to me. Like I was at a party and like I can't believe NVIDIA's at 140. Like weren't they just at 1,000 before? Like there's a lot of people like that. I feel like who maybe just like don't follow the news every day, which is totally fine. Like Austin and I commit our lives to this. We love doing this, but for NVIDIA, like another reason why they did that split is for the option flow. Once it was at $1,200, you want to buy a 5% bump on like an option call 5% higher than wherever the share price is. Like that starts getting pricey now. And because NVIDIA is now technically a 10th of the price, like those options that you want to buy 5% more of, like it's a lot cheaper to buy one contract of that than it was before, where you probably had to commit, I don't know, $1,000 for just one contract, where now it's $100 and there's gonna be a lot more volume. And it's just, there's a lot of psychology around it. And that's why like what Austin's saying is kind of accurate. Like a lot of people like have that in their head of like, oh, it's 120 bucks, it's 125 bucks. They don't really look at that. It's still a $3.4 trillion company. So I do think so. We're about to talk about NVIDIA's not evil little sibling, but like sibling rivalry with AMD. If you guys haven't seen, today was a very semiconductor day. You saw across the board just a ton of names in the semiconductor space run. You saw Intel, the dinosaur of CPU in the hardware digital economy, up 8%. So Marvell up 4%, and AMD's up 4%. So you're asking yourself, like, why is Intel up 8%? Like, there's no news flow to justify that. Like, what's happening? When names have run up as much as it has in the semiconductor space in 2024, there's going to be a natural curiosity of, like, who is next? We just saw Tesla just go up 30, 40% out within weeks on technically thin air, because like there's no real news except for that energy storage business on that 2 weeks ago. But I don't know if that specific segment justifies a 30% plus move, but you're seeing the appetite for these laggers there right now. So now I think a lot of people are anticipating, all right, what's the next lagger? It's AMD, obviously. They've been lagging the most of all the hardware names, specifically in the GPU space. So you saw them breakouts. And now that got validated kind of because Intel broke out. It's that same methodology of like, all right, what else is lagging? AMD ran, and now Intel's running, both on kind of no news. That's justifying my opinion that there is a rotation towards these laggers to get that alpha, where there might not be as much juice to be squeezed in the Amazons, the Microsofts, the Nvidias. Like, there's other areas where you can get some alpha in the anemic month of July where there's going to be no volume. And I think you're kind of seeing that repositioning happening. We saw with software names prior 2 weeks. Like, you're seeing a trend happening on lagging names catching a bid. So naturally, Intel is the most lagging name of all, and you're seeing them up 8%. That justifies what's happening in that repositioning.
Right. And just once again, this is why you need to get in there and get in the Discord to get the deep dive research. You also get the picks. I mean, this is from October of 23. I was long. The second we get above 100, I was long. Done. We're up 60, 70%, already in the position. Nothing to worry about. Get a nice, at least on my position, I got a nice 25, 30% margin where I'm willing to draw down and either add more or just hold what I have. You don't have to worry nearly as much or feel or experience any of that anxiety if you can just manage your entries on the positions well, meaning you buy at the right time. Because I hate when people, I had a guy say that to me, my advisor that had like, I don't know, my grandma, when she passed away, she left me like $1,200 or something, some bonds or something. And so I had to go to this advisor, and he was like, you know, you're going to make some mistakes timing the market. I'm like, dude, that's all this shit is timing. Mm-hmm. Like, I need to know the right name. And to quote Shay here, because the best way I've ever put it is that the fundamentals teach you what to buy. The technicals teach you when to buy it. So this breakout was very clear right here. But more importantly, when we were buying this at right here, so right when we really saw that explosion in October, November was the breakout. I'm going to zoom in a little bit so you can see it. November was the breakout right there. That was the key breakout everyone was looking for, that orange line, that break over 96 and a hold. Then we saw explosive volume to the upside. We have not even come close to our entry or stop loss since then. We have not traded a cent below our entry since that trade alert. And now what we're seeing is continuation after we pushed 226. So this thing was up 120%. It's still going. I'm still holding every single little bit of it. Why? Because you're seeing the next leg up. He talked about the laggers, the angry little brother, whatever the hell you want to call it. I don't like sympathy, but at a certain point, I don't think you can ignore it anymore. Do you know what I mean?
And that's the best part about a story stock. A move doesn't have to be justified on numbers or fundamentals, and it can continue carrying and carrying. So like AMD is a name, like it could go to 250 on no news, just based on people assuming they're going to catch up in the GPU space. Gaming might be recovering, or who knows, AMD starts getting some partnership announcement. Either way, all this is just story, and there's a lot of alpha to be made. And that in the meantime, with that 25 to 30% move, when NVIDIA might just be consolidating, these laggers will start catching the bid like the AMDs.
Yeah, and I also want to. Oh fuck! Sorry, 1 second. Oh, I messed this up, and why is it doing this? Hold on a second. Go away. NASDAQ. So let's go take a little peek ski-poo here as to why we're bringing this name up now. And just to be very clear, I want to make one point very clear that you can't have sentiment or opinion when it comes to these names, right? It's not like, oh, I'm an NVIDIA guy. No, I'm an Austin make money guy. How do I win? I don't care who's doing it, what they're making. I want to find the best positioned companies that have the best upside, right? NVIDIA has it. So does AMD. Just because we were long on NVIDIA, made a ton of money, does not mean we don't go long on AMD almost at the same time to also make money. Now, you don't want to have full exposure in one space, right? But I allocated it appropriate based on my plan. Once again, go to the Discord. We'll build you a plan, help you understand it. But let's flip over here to, I need to share a different one really quick. We're going to flip over here to look at projected upcoming earnings. So here we are on NASDAQ's terrible website. Let's go to earnings. This is why you should care about NVIDIA. Right here. Take a picture. Let it sink in. The trade that we're going to break down for you is, and again, this is going to be in the Discord. I'm going to break this trade down Friday. So you got to get in there if you want it. It's going to be an options trade. I'm estimating at least a 250% return on this one. It's a longer term trade, so I don't have to like sit anxiously and manage the position. I'm just going to jump in and let it ride. And I'm going to trade it all around Q4 of 2024 earnings. Why? Because we always see the run before the results ever come out on the tape. I want to capitalize on that anticipation all the way up, a little bit of buy the rumor, sell the news. But I also want to be in the right position like I was with NVIDIA, so that should those earnings, which are expected to be great, be astounding, I am going to get all that extra delta, all that juice, all that IV inflation. I'm going to get that again. So again, when I went long Tesla or long NVIDIA, like I guess post split adjusted price of like $19, whatever, I didn't think it was going to go to 1,000. I knew it was going to go to $300-400. I was very confident in that. What I didn't expect was the explosiveness of that earnings. And so I was in position to capitalize on that huge leg up. I want to put you in that same position with AMD. We're already in at 100, right? Now, if you're not in the group and you didn't get the trade on Friday, utilizing options, and I think it's going to make us a 200 to 300% return. Call it 250, split the difference. Because if you look at these earnings, and I love a good long-term earnings swing, beat, win, we win. We're going to win on the next two earnings, right? We're already expecting growth. All we have to do is match or beat. We're going to get run up on the meantime anyway. And Shay can give you a lot more insight into that, and I'm sure he will on his channel as to what can be expected, because he's definitely the fundamentals guy here. But I think the trade is going to absolutely crush. I'm very excited. And they've beat 3 times in a row, so trade should be good. So you're going to get that on Friday. Make sure you're in the group. Make sure you have your access. That is going to be a premium stream moving starting this week on Fridays. That's our 3:30 Eastern live stream where we craft the passive options trades. We go through the more detailed long-term trade ideas amongst a few other things. Let's keep it moving here to talk right now. I gotten quite a few messages as far as updates on this position. So we're going to flip right back over. Another one we gave you, to quote my friend DJ Khaled here, 125 on Snowflake. It was given to you on a silver platter. And we're trading already 10% up from there. So
also, guys, the option flow for Snowflake, 160 calls are flying right now. Again, the appetite for high quality laggers, I think that's going to be the theme in the month of July, because it is a retail heavy month. All the big dogs are in the Hamptons, low volume, very hard to short a dull market. That there is a saying, don't short a dull market, is because nothing trend breaking can happen without volume back it up. Snowflake is a clear lagger with a clear bottom. They're 50. I didn't love that they got rejected on their 50-day moving average recently. But again, I kind of care. It went 15% move in 1 week. Fine. It rejected. Now it's not pulling back. It's consolidating. It wants to really test their. I think we're going to trend towards the 200-day moving average, which is around 168, which is why the 160 calls are kind of like there's a lot of volume and open interest on the 160 calls. As a long-term investor, I do want to caution. I don't love stocks running up ahead of an earnings print. Always look to the left. You see a Micron situation. We just experienced it 2 weeks ago, where Micron's up 70% for the year. Look to the left. They had really good earnings. They just had a lot of CapEx related AI investments. That's going to push their earnings expansion story that we thought we're going to hit this year to 2025. Snowflake, they're doing really well still. And the story that they're just a data warehouse company that won't be capitalized in AI, which is total FUD in my opinion. However, like I don't want it seeing going up. If it hits that 165 level, that is a 35-40% move ahead of their prints. That's some expectations that if software, we still haven't gotten proof that Gen AI, we're going to see some kind of bump in the software names. Like right now, the primary weight of the IT budget is still in the investment stage, which is they're investing in compute, hardware, servers, and taking away the dollars that used to go towards the applications like software names is going towards that. Eventually, it's going to return back to the mean. Nobody really knows when that's going to be. It could be this quarter. It could be the next quarter. I know for a fact it's going to revert back to the mean sometime soon. So if Snowflake does run up, or a lot of these software names continue running up ahead of their earnings cycle, and we don't see that inflection point, there's going to be a really ugly pullback. And that's going to be that's going to be around the same time as the seasonality weakness of September as well, where I just don't want to set up like I'm also not really done adding to my software names, knowing that like this AI is going to be like bonkers for the select few software names next decade. And I'm not ready. I'm not done adding to those names yet because I want to add as much as before possible, like similar to Tesla and 140s. Like that's all I was adding. I went from a no position in Tesla in November to a 10% position within 6 months. That's abnormal for me. Just because I saw a crazy opportunity of like, we're not going to get this opportunity for a name like Tesla to accumulate anytime next decade, in my opinion. I feel the same way about certain select few software names. So I'm not really done adding to these names in 2024. But software, like if you want to go in Snowflake, it was way oversold. It's going to run up a ton, in my opinion, in a similar fashion as Tesla. Once you see their go-to-markets AI products getting reflected into their fundamentals, because right now management is guiding for all the expenses related to those AI go-to-market products with zero revenue recognition. That's the definition of a sandbag. That's nearly impossible, in my opinion, for a product like Snowflake to invest this much in AI-related investments without seeing any kind of dollar ROI on those investments, leveraging the amount of data they have in their ecosystem. That's like impossible. It's like valuing Tesla as a car company. It doesn't make sense. So I do think like Snowflake, I would love them to consolidate around here, let their 200-day moving average kind of catch up to the stock price. As it consolidates, I can continue adding more. And then expectations won't be so frothy ahead of their earnings prints. And that's when they can fly up. It breaks the key levels. Like if once it clears 160, let's just say 170. Once it clears 170, in my opinion, I do think it's going to go to that psychological level of 200 really quickly and then retest the prior highs of 230. And after that, this name is going to fly just because of the insane multi-year base it's been in. And they're going to have if it hits 230, they're going to have a clear position in the modern tech stack of enterprise 2.0. What do I mean by that? Enterprise 2.0. AI is going to consolidate the whole industry into a select few names that are going to have unprecedented pricing power. I think Snowflake's going to be one of those few names. And because of those few names, like there will be clear outliers of tier ones, they're going to have an insane premium associated with their valuation, similar to what CrowdStrike has, like a 40% premium valuation against the cybersecurity comps because it's justified. They're a clear tier one cybersecurity name. I think it's going to be the same thing for software. So that's why like once it clears 230, like I don't know the ceiling on that company, on that stock, because data sharing is going to be such a necessary component in the enterprise space next decade. And Snowflake's the only one who can really compete with that on their holistic approach towards data. So that's why I'm like, I want to add as much as I can the 140s because I'm envisioning this being like no joke. I'm not pumping the stock because it's a 10% position for me. I see it as a $500 stock by the end of this decade, like a minimum. Like I just think it's a mega cap in the making. So I want to add before the market or the vast majority realize that because I'm not done. I want as much as possible. I'm just not done yet.
No, I love that. I couldn't agree more. And just to give you a quick 1-2 on this before we break down those SPY options price targets, phenomenal setup. Stocks Buddy actually just flagged this bullish. We did get the crossover on the RSI. We're looking at the weekly chart here. So we're talking long-term here, boys. We're not talking about that short-term nonsense. We're talking about a reversal. And we are starting to see the beginnings of the making of a reversal. Key price levels to watch. Again, I'm telling you these because you should put them on your chart. Write them in a damn notebook. I don't care what you do with them. Do something with them so you know what they are. 145 to 163. That's our focus. We don't need to go beyond that because right now that is all that is in front of us. We need to break 145. We need to hold it. We need to close over 163. And then we are really talking here because we have a pretty nice liquidity zone. We can crush through to 230, as Shay was just explaining to you, with the kind of that being the, I would say, the next main price target that I really want to see. We got to cruise over 145. We got to hit 163, break over. Nice consolidated support there. I'd like to see a little sideways, just like we saw here. Let's get north of 150, and we'll just trade a little sideways, let a little stock accumulate in the account of the wealthy, and then let's let this thing ride because you know what? We're already in. That's my point. You guys are beating institutions right now on your cost basis. How does that feel? Take a second. How does it feel to know that, I'm going to turn this off so you can see, that you are beating institutions on your cost basis? That should feel good. That should feel really good. You guys should be celebrating that a little bit more. So let's get into it. Let's get these SPY options mapped out and play a little smash or pass and keep it moving. Unbelievable. This chart is just so you know, over the last year, I've been mapping every single level. You can see them all on here. We have crushed 52 weeks in a row of a 100% plus trade doing this exact analysis. Here's where we sit right now. Let's go to the 1 hour. We have broken up above one of the last ones we mapped, which is 539. And in my opinion, right now, the strength we're seeing, I don't like the volume per se, but if this delusional market continues, we're going to 561. I think that right now, what we're going to focus on right here on the bullish trade is we want to see it stay above 550. And ideally, it breaks the high, but none of this is valid on the bullish thesis unless we're trading above 550. If we get a support touch at 550, optimal entry. Now, knowing that, let's take a look at the options. Take a look at the options chain here. Let me get that pulled up for you. Dun, 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 dun. 1 second. Stop screen. Now I'm using the TradingView app, which I got to say is pretty quality here. Let's go to SPY here. And let's go to the options chain. As always, told you guys this many times, I want to be ideally about 3 weeks out. So we're looking at July 23rd, July 31st, about 23 days out. I think we're going to hit 560 to 561. This 561 is well priced. IV is low. Delta is strong. It's a decently tight bid ask. I like this contract. This is probably where I'm going to put my focus. So it would be the 561 call in the bullish thesis that expires on July 31. Now we're going to kick back to that chart real quick. And basically, here's the scenario that has to play out for this to be validated. Either A, we open up tomorrow and we violate this 556 and change. A break above that, to me, would signal $5 move is coming for the day or over the next 2 days, at which point you will capitalize significantly on that trade. The other opportunity, bullish speaking, is if we test resistance and we get bumped down here, but we find ourselves a nice support at this 550 level. I like it a lot, and I think that's the springboard to 560 plus if we get it. As you can see, price has touched off there. This was our previous resistance. It is now our support. We got confirmed that it is our support right here when we tested it and then held up. So those are your two scenarios. Either this breaks out right away and you got to take this as momentum trade, or you get a consolidated support touch, which would also coincide nicely with this EMA right here, this move SMA right here. As you can see, it's been riding it pretty convenient consistently. So that's what I would be looking at here on that bullish thesis. Now, bearish thesis. I wouldn't call it as much a bearish thesis as I would an opportunity to play a short-term downside. That's what we're gonna mark it as, because I don't think we're about to drop 10 points. It's just I don't see it. But I do think if we can't hold this 550 support, it is reasonable to assume that we'll see a little bit of a touch to the downside. Now, that being said, we would look for this to break this support, get rejected on the way back up. Let me zoom this so you guys can see a little better. We're going to break this support, get rejected on the way back up. We want to be on the 30-minute chart. That's where we get our confirmation. We want to break below. So this is bullish confirmation, right? Price breaks up, and then it comes down and tests our support. The bulls take the price right back up. That's a confirmation. So that's an easy trade. We already gave that to you 2 weeks ago, that the trade to 555 was there. If we get that break, that's a $4 move. You should have made 30 to 50%. We gave it to you. Here's the next move. We come below, we hit our heads on resistance, and then we trade this down to 548 with potential to go as low as about 545. I think we could see another $5 swing to the downside. So now the question is, what options contract do I trade for that? Well, let me answer that question for you very quickly. We go back to the SPY options chain, switch it over to puts, same expiration, and we are going to look at, what was our first one? It was 548. I think we kind of got to go 546 here. Priced at $220. Delta is not great. IV's slightly higher than on the call side. About the same. No, that's $10 out of the money. So of course it's priced a lot lower. You know what? There's an easier trade here. I take that back. So if we lose 554, we're going to 550. So let me swap that out. If we lose 554 and a half, so $554.50 a share, if we break below there and we get that confirmation that we're breaking down, we're going to take the trade to 550, because that will continue paying us if we see continuation down to 548 or 545. So we are instead looking at the 550 put dated 7/31. It's priced at $300, so $3 a contract, aka $300, since it's based on 100 shares. That's the options trade that I would take for the downside. Any promo codes for this? Yeah, let me Pookie, if you're still on here, let's get this man a little taste. Let's give some shit away. Let's give him a little promo action. I appreciate you asking. So let's get you a little promo action. Yeah, stick around and or DM me on Twitter, either one of us on Twitter. I'll make sure we both have the code so that you can get in there. So that's what we're looking at on the SPY options front. You now have both trades, both bullish and bearish. You have no reason not to make money unless we trade between 554 and 555 for the next 2 or 3 days. There's no way you don't make money on either of those trades. So please save this, rewatch it 20 times. I want to train you how to look at options trading on a day trading basis. That's what I'm giving you, is that juice, that research, the alpha. I want you to win. Make some money. Send me a DM on Twitter and be like, thanks, dude. Made $800. Just tell me. I love that, because then I know it's what we're doing is worth it. So share those stories if you have them. Take advantage of what you're being given here, because this is that good stuff. I would have killed someone for this when I started trading options, dude. You know how much money I lost trading options when I first started messing around with them, dude? It's pathetic. It's real bad. Unbelievable. We're trying to prevent that trauma, okay? We're trying to save you from yourself. And, the Wall Street Bets style shit of like, hey, I'm through my whole life away. Let's laugh about it. Like, cool. I don't really want to do that. I don't really want to do that. I don't want to be broke, man. I just don't. I'm a little bougie. Call it what it is. I like living a good life, eating good food. You know what I'm saying? Driving an okay car. I don't like financial insecurity. I want to know I can pay my health insurance. Like, I just kind of want that. It's pretty nice. Also have kids. So a little different. So let's get into Smash or Pass here. Drop your tickers in the chat. We just ask that you, I'll put that ticker in the chat. Just drop one at a time. You can leave a few. Just do one per comment so I could pop it up on the screen. Don't make me have to retype it. I'll skip you if you do that, because I just don't want to do that. So we're going to start this off here on D-Dog. and let's talk about it. This is yo baby. So I'll let you get into this bad boy first. I'll get that chart back up there for you. Go ahead.
All right, so this, I wonder if David follows me on Twitter as one of my subs, because this is one. So Datadog is showing the way their business model works is a consumption business model. So what does that mean? The clients pay as you use the product. Like there's no fixed amounts as you enter an agreement, no seat-based agreements, like pay as you go. Datadog, Confluent, Snowflake, MongoDB, those 4 names have this business model. That's why if you believe in the AI thematic, there's going to be a stupid amount of code and data is going to be generated from AI in the next 5 years. These consumption models are going to be printing cash along the way, like just absolutely printing cash. So observability, which is what Datadog does, is kind of not the safest component of it, but it was the one that had already the free cash flow margins at 30%. They're growing top line low 20% for quite some time. However, I recently downgraded Datadog to a starter position in my growth portfolio. Why is that? Valuation. If you guys don't know, my experience with cloud optimization has shown me specifically that AWS, for example, is designed in a way that often leads their customers to overspend by a ton, significant margins. Sometimes as much as 20%, 30%, or even 50%. It's a wide margin. So naturally, Datadog kind of fit into that segment of the data ecosystem that was built. It built its business by identifying these areas of overspend and helping customers save money as they're kind of getting going to that cloud optimization with AWS and Azure and Google Cloud. So their observability, they're the kings of it. So they wait, again, long-winded answer. They help customers save money by not overspending on cloud optimization. That's what Datadog does. It's a highly competitive space. So I'm talking purely 5+ years out in my head. Highly competitive space in the private markets and also public markets. Datadog doesn't spend as much on R&D as any of their competitors because their product is so easy to use. It's on the pricier side, but it's so simple. And simplicity will be the common theme word for the next couple of years. AI is going to make everyone's life simple, enterprises and consumers. However, when Datadog was trading at 130 and Snowflake was trading at 120, all of a sudden Datadog was trading at, I have this note right here, was trading at a 35% premium to a name like Snowflake. So obviously Snowflake's way oversold in my opinion, but also spotlighted that Datadog's showing a ton of relative strength. Yes, they have a specific, they're going to be in the modern tech stack due to observability is going to be absolutely necessary because a lot of enterprises are going to go through that cloud optimization stage, but it's highly competitive and them growing 20%, I don't think it's going to grow much because of the competition, where Snowflake essentially has, in what I believe is an unlimited ceiling, with 35% of the Fortune 2000 data already stored in Snowflake with no go-to-market AI product, really. Like Cortex AI is brand new. I think that was a better place to put my money in when Datadog's at 130, and that's why I downgraded Datadog from a 4% position to 1% position. I took the funds, bought Snowflake, and I bought Tesla, and I bought MongoDB. All 3 of those names have gone up a ton in the past couple weeks, so I look smart right now. But Datadog, if you want to talk pure technicals, that's my fundamental thesis on why I downgraded it. I'm just unsure of how sticky their product will be once customers don't overspend through the cloud optimization stage. And once competition starts becoming a reality, like Dynatrace is a reality of competition. Elastic isn't at all, but they do similar features. It's a stretch to call Elastic it's competition in Datadog, but you get the point. There's a lot of competition where Snowflake, in my opinion, is a duopoly of Databricks. MongoDB, there's no competition. There is somewhat of competition, but on the NoSQL basis, there really is, in my opinion. And Tesla, you already know the thesis, there's no competition. So I want to go on the safer plays on long-term moat that have been oversold and lagging, where Datadog was showing strength. It's up. Was it? Datadog is up 10% for the year, where like Snowflake even right now is down 30%, MongoDB is down 36%. Tesla's just up 2% now after the monster move, but they were down 30% when I initially made that trade. But technically speaking, they're the strongest name out of this bunch. And catch 22, that's one of the reasons I sold. I wasn't as I didn't have as high conviction on their long-term moats due to their outperformance this year. You might call me a schmuck for thinking that, and maybe I'm over analyzing my holdings. It's just my appetite for MongoDB and Tesla and Snowflake was just so much higher than Datadog. I'm like, all right, well, until the noise clears out on my specific heartburn on Datadog's long-term moat in the data stack, I'm just going to downgrade and monitor it. I'm up 70% of the position already. I'm not selling it. I just not as confident as other specific database plays of this AI thematic. But again, if you want to talk purely technical, I think Datadog's going to hit 150, and the next catalyst will be the earnings report. They're going to be, in my opinion, them and Elastic will be the first two names in the software space. I think you'll see that Gen AI bump. Like you're going to see in that specific realm, the data stack as those two names. And it's a good precursor for the other Snowflake and MongoDBs or other software names. But if Datadog doesn't deliver, I see this going down 30%, which is kind of crazy to say, but that's just it's just, there's a lot of competition and they ran up a lot and they don't have that same appetite as like the other names. But as of right now, it looks like it wants to test 150 in my opinion. I don't know. What do you think, Austin?
100%. I'd say like 148 right there. So we mapped this out for them last time. 148 to 170. We just did a simple fib retrace like that. Full retrace reversion to the golden mean is $148. Stocks, when they run from bottoms, they always revert to the golden mean. They almost always hit it. Now they don't always go past it, but they almost always hit it. So you can kind of use that as your, I would say, guideline of like, okay, where's this going to go? Realistically, 150 absolutely on the table. You could see we actually, this line is still here from the last time we talked about this one. We expected a little downside, a little continuation, then a break up to 150. So I would say that that's spot on, dude. You nailed it. I mean, the bulls are holding it down here. Look at that. They're just fighting to get above that level. So you can't argue with that. Volume's not, it's not exceptional. It's not what I'd like to see, but it's the price action's there. And I mean, this move up is wild. I just think we need to see stronger volume like we saw right here from $80. But yeah, I think that $80 range is like long-term consolidation. I don't think we're going to see that again unless like their business crumbles. So yeah, I'd say
it's expensive. I'm saying like I would be cautious. Like the cloud again, it helps people stay from overspending. I just like
let's look at some other opportunities. It's a good company. It's just run its course, and I think there's other opportunities that exist where you can make more money in a shorter period of time with less risk. IonQ.
I love this. Is my bad boy and my small cap was one of my mini monsters.
Okay, this is from the doctor. He's been with us for like 4 or 5. He's OG, dude.
So people that call me crazy, and the people I talk to like validated a little what I'm about to say. First off, quantum computing is, if you guys don't know, it's the next frontier after AI. It goes AI. Once that plays out, quantum computing is going to be the next frontier, supercomputers. After that will be the space economy. IonQ is the best speculative play you could on quantum computing. Their technology is superior. I think it's just really like eye-opening. The people I talk to say like could be the next NVIDIA like in 15, 20 years. It could be. That's how like the tech is that superior. It's just there's some not corporate governance, like their founders left, CTO left. Like there's a lot of like, why
something
would they
hinky? There's like something that's like just doesn't make sense.
It doesn't make sense, in my opinion. It's like I know the technology, and I fact checked it with like people in that industry. Like they validated it. It's great tech. So at the end of the day, like this won't be a zero. This will get acquired by an IBM or who knows, an NVIDIA, maybe. But like this is worth for me, it's a half of 1% of 0.5% position in this name. Buy it, put it away. I won't even look at it for a couple of years. That's kind of how you have to treat IonQ, because we are so far away from quantum computing, but once that kind of catches a bid, their technology is like so superior, and it's gonna fly in my opinion. But they're not gonna be profitable for like a long time. Heavy capex required business models are not where you want to be right now. There's no appetite for it for higher for longer interest rates. You're kind of seeing the chart fall apart. It almost wants, in my opinion, wants to retest $5 for some reason, and
and just build a base.
Build it exactly. It didn't belong, in my opinion. It didn't belong at $20 when it flew. But if small caps catch a bid again in Q4, like if you guys don't remember, November and December last year was a wild 2-month stretch for small caps. Absolutely wild. Quantum computing, like IonQ, the small cap semiconductor names, the small cap genomic names, they will be catching bids at the end of this year. And IonQ, it could go from $7 to $20 on no news just because of their technology and a highly secular growth theme like quantum computing, where there's not that many options out there.
Love it. So Apple, this was another one. Long-term holder. We've been buying this 130, 140. We're buying it pre-split. And then we told you 196.75 above there is about to rip. I think we said 215, 220. We had 227 today. I'm going to let this run its course. Like personally right now, I don't see the opportunity here for me to make risk off money. Not risk off money, but money that isn't all risk on. You know what I mean?
That 15% move, that's the super cycle. If the super cycle doesn't happen, this will pull back. But in my opinion, that move of like predicting a super cycle with AI infused chips into AI, whatever, the new iPhone's gonna have an AI component, that move has already been made. So now what's the next growth avenue? There's a hardware event next month, I think, in September or August. So maybe there's something they create their own chips that makes like some competitor on like AM. No, I just don't see it. I think the move's made. I'd pass. There's better places to be.
Same. Intel.
This one has legs. In my opinion, like it's breaking out. It's a lagging play. There is a world if Taiwan gets disrupted due to geopolitics. Intel is the only route we kind of have to offset that. But that's such a black swan event, and like TSM, Taiwan already has like big billion-dollar agreements with Japan and US, so they're not that leveraged in China anymore. So China invading Taiwan isn't similar impact as it would 2 years ago. So I don't know if they're going to do it. Intel, they're the worst kind of business you would want to be like invest in. Like they fumble the ball, and so like they didn't see the vision of CPU to GPU until it's too late. Their foundry was like right there. They were right there. It just makes they just fumble the ball in a way that Blockbuster fumbled the ball in streaming. Like it's just like something that they just corporate governance issues, and they fumble the ball. Their foundry business should be firing on all cylinders. And like, yes, there's a lot of you can catch a falling knife with this name, but again, NVIDIA is 2 years ahead of all competition, and they have the luxury of printing cash when Intel really doesn't. It's just it needs government help to fund these manufacturing plants. Like it's a trade. Maybe it can go retest the previous high $50 based on sentiments, a catalyst, a sentiment trade on NVIDIA, but don't trade this name. Don't own it. In my opinion, trade, don't own.
Yeah, absolutely. I mean, that's it right there. Let's keep moving. So, American Airlines, and also I want to just, I hate being interested, but like those travel numbers really made me think.
If you want, there's a better way to play that's fintech and those travel numbers. Specifically, like Shift4, for example, they have a huge presence in entertainment. So if people are spending on travel, they're probably going to be spending on entertainment when they go travel these places. That's like, I think airlines are a dud of an industry. Like there's no way to play it. It just doesn't. Maybe it's just not my cup of tea. I'm just talking.
I gotta pass on it too. I just don't like the chart either. There's just cratering. There's no strength. Nobody's coming to the market and saying, I like this. I had a significant position in Delta for a while, for a long period of time, and it's paid off and it's still very green. I would say that's about the only one that I ever have liked. I mean, if any. That's the trouble, man. I bought this, I don't know, 22, 23 bucks. It doubled. I've kept a good chunk of it. That was just post-COVID buy. Yeah, all right, forget them. Palantir, let's talk about it. All-time high, not all-time highs, but local highs.
I got pulling my Palantir hat for this
back
one.
to
right
2021.
Listen, Palantir, this upcoming earnings, it's a make it or break it. If the commercial client growth actually starts getting translated into the commercial revenue, this thing will explode because it's proof of concept on the commercial scale, which I think is going to. Nobody's talking about that ontology. I won't get into too much right now, but essentially, if LLMs were to work, you need ontology built on top of it. And that's Palantir is the only one who can offer that. So they're the best way of playing the picks and shovels play on LLMs and the pure AI play. However, they need to be growing at 25% top line growth, not 22%. And if they can deliver an uptick on revenue to 25%, this will explode past $30. And honestly, again, as the only pure AI play in the market, this could run. But if we don't see that kind of correlation between commercial client growth and like commercial revenue, I could see us retesting 22 again. I think that the days of Palantir in the teens is way over. It's done. It's like, I think NVIDIA breaking $50, that's never going to happen again. I don't think NVIDIA will ever go down 50, 60%. Absolutely not. I think Palantir, same thing. This feels like it wants to test 30 finally. I think it's waiting for the next catalyst, which is their earnings, to push it past it.
I couldn't agree more. I think that it is going to really, this is the test your metal. And so we talked about it a long time ago, months ago. This was the golden mean reversion was $30. I mean, we mapped this price target out when this was trading at 8. And I'm really curious to see how this interacts. We saw a lot of strength at 16, 17. I have a lot of shares of this. I have some open options contracts that are at like, I don't know, 800, 900%. This is going to be my NVIDIA number 2. It's unbelievable, I think, how much this has run, and I couldn't agree more. I just am excited to see if we finally see that readout in that print that takes this, turbo. I think it's coming.
I think so too.
Let's keep it moving. Keep it moving. We just got Palantir. What is next? Lulu. Not a big fan, if I'm being honest with you, Nikel. I wouldn't. Yeah. I think they hit their lick. I'm not saying the business can't grow, but look at how abysmal this chart is. So I did have this mapped out. It's ironic that we're here because I did map this out at 294. I would consider being a buyer. But
do you want to catch a falling knife on a consumer product that's dying?
No, I don't. That's what I'm saying. That's why it sucks. I did this like a year and a half ago. I said, you know what? We see 294 again after like March of 23, right? When you saw that boom, like I'll be a buyer again. But I can't do it.
Listen, if you're twisting our arm and like giving you a smash or pass on just technicals, I mean, that 290 level is protecting like a champ. If you go January 2023, look at March 2023, look at that gap down, and we just had 2 months ago, and now like it's protecting it. So I think there's better ways you can use your capital. Opportunity cost has to factor in your mind. Maybe if you want to buy, I don't know, 350 calls for 2026, like I'm sure you'll make money on that way based on this, but doesn't do it for me.
I'm not feeling it, dude. I'm just not feeling it. Hopium, the Chag says. I agree. I think that's it. I think they've run. Dude, there's no moat ever here. The moat is their brand and their community and their lives, and like I feel like that's just disintegrated to the point where there's so many competitors, and women are willing to try new products and try new brands, and once they do, and they go, it's better or the same, but it's half the price.
Also, don't underestimate the misogynist CEO founder playing a part in women's like mentality.
Oh yeah, the guy who made. When we talked about that once, right? I met this guy and he was telling me he couldn't believe it, but that whole thing of like when people were saying, "Hey, the leggings are see-through," and he said, "Prove it. Come into my store and bend over, and if I can see your underwear, I'll give you a new pair." Like
not even that. He's a little racist too. Like it's specific.
I've heard that one.
Yeah.
I've heard that one. I've wondered if it's true myself. That's terrible. I don't even want to get into that.
Yeah,
one.
we won't get into it.
You
But
guys do your own research. Go to
Yeah.
TikTok. I'm sure you can find it somewhere. PayPal, the one that just never left the nest. Never left the nest.
I get this question all the time. Tesla's ran after basing and it's been left behind. Why wouldn't PayPal?
When PayPal?
It's a different industry. Tesla's a clear moat. PayPal has a moat. If I had to squeeze one out, first mover advantage with the data they have, but it's payment services is a highly competitive industry, low margins, highly competitive. Like I don't know like what anyone's long-term moat is. They're gonna be cannibalizing each other for years and years to come. The cheap will always look cheaper unless this new CEO does some kind of twist on PayPal, like they make it like an ad tag almost, where like the margin expansion story with a ton of ads that they put on Venmo. Fine, maybe, but again, like them, they fumble the ball. Like we're talking about people fumbling the ball. Like Lululemon fumbled the ball in like their specific niche. PayPal did it too. Like Venmo was the first of its kind. They did nothing with it. They didn't leverage all the users PayPal had for whatever new source of growth. Like Zelle, I use Zelle more than Venmo now.
Yeah,
there's a lot of competitors now to Venmo who are like, all right, data can't be their only moat. And right now, I just see that as this current climate for PayPal, their data is the only moat that I can see, and that's not a great moat to have in that specific industry, in my opinion.
Yeah, it's not, and it's not going to really do anything. I really don't like. It's rough, dude, because everything is there to capitalize. Like their opportunity is exceptional, yet here we are. It's unbelievable. All right, so let's take a look at which one's next. I saw you a nil. NIO. Who's flexing that platy status? My guy. He's a platinum lifetime member. That's my guy. So like dubbed the Chinese Tesla. Unfortunately, Elon's in China. So that was the whole thing. If they can't break into the China market, then yeah, there's room here. But they've proven it. Now I will say this. So this is one that I bought at $2, right? Everyone in this community, when we first started, we're buying this at $2, $1.80, $2, whatever, all through COVID. And it boomed. I mean, it went $60. That was a phenomenal trade. And then I started to really believe, man, this could come back. And it just never did. And now hearing this news of them getting on the approved list of, potential to order from China, that's scary for their long-term growth. But I will say this is also the spring point where I think they've built enough consolidation and accumulation. I think they've had enough accumulation here that like I can see this holding $4. I could see it. And we did it before. Now, can we go lower? Absolutely. But if there was an area, it would be here that I'd like for a little dead cat snapback, just like we saw here. Nice double your money type trade. But long term, I think they're cooked. I mean, what do you think?
Oh, they're fucked long term. The pitch for NIO was always
Chinese
Tesla, but now Tesla broke that thesis. They have $5 billion of cash. Their run rate's 2 years, and they're not going to be profitable for another 4 or 5 years. Just do the math on that. All they're going to do is dilute. And it's just like, what's their moat at the end of the day? Like by the time they become profitable in 5 years, guess what? Everyone will be having FSD in China through Tesla. So no moats.
Now, I don't know if we've ever talked about Roku. I'm curious to hear your thoughts.
So Roku, I was laughing so hard. Like I think it was 3 years ago when everyone's saying they're going to be the connected TV play on programmatic ads.
So just for shits and gigs, I want to also say this. I love that we didn't even know each other, and we did the same thing pretty much. When this was trading at $4.15, I bought 2 years out $100 puts that went for 10,000%. Because I started to see native manufacturers integrating their own shit. There's no growth there. Like Roku has the cleanest interface. I think that's indisputable. Like we have a new Samsung, the Frame TV. It sucks. It lags. It's so nobody does like Roku, but they should have been in every single TV, not just the low ends. And I think they should have built a Roku Premium on top and white labeled the interface to all the manufacturers to then create a totally new income stream and basically capitalizing on the sale of every TV in existence rather than try to sell independent of the TVs. Because if you can lock down distribution without having to distribute yourself, why wouldn't you?
No, I mean, first off, great play. I wish I had the kahunas to buy those.
It was a blast, dude.
I mean, I was just fighting. Like, I was buying Trade Desk TTD as a ticker over Roku, and everyone kept saying like they're way more valuations, way higher. Like, why not buy Roku? They're just as big of a CTV presence. I'm like, no, they're not. If you look at their earnings reports, they never, during that huge business spending recession, Trade Desk was the only ad tech play that actually expanded and made money, where Roku just deteriorated. They have, if you guys don't know, Roku means 8. I forgot in what language, because it's the 8th company the founder founded. So like, how is Roku ever going to improve? That's a great question. Walmart just bought Vizio for $2 billion this year. That's a competition for Roku, in my opinion, because the way Roku was going to make money was like, we'll sell our TVs at near break even. We could care less on making money on the hardware component. We'll make money on the operating system, the Roku. So now that kind of became over a headwind, where Vizio now is through Walmart. If you guys don't know Walmart, they're the soul of the whole American economy on this kind of product, in my opinion. Yeah. That's a headwind. And Roku,
dude, I'll never forget the first time my dad brought home a Vizio like my dad was, he was on game, I would say early, because he's super cheap. So he was on game early. And they were great TVs for the price. And I'll never forget how hyped he was. And it was like, before I knew it, there's a Vizio in every room. Like anywhere you go in my parents' house, there's fucking Vizio, dude. Because he just went ape shit with it. But I would love to see Roku, and again, I would love to see them get inventive and find a piece to integrate. Like Snapchat would be a great place to go, because if you can start, like ever since I saw my wife do it, I'm going to go on record. I guarantee you somebody's going to do it, and I'm going to be so jealous that I didn't develop it myself. Where my wife would start like, oh, I love her shirt, and look it up on this website, right? I think Roku could have literally integrated the e-com platform into the content experience. And it would have been fucking brilliance, dude.
No, I mean, they could have been the picks and shovel play of the whole entertainment industry.
Yeah.
Easily.
And consumer. Because, again, dude, Amazon will do it. Mark my words. Amazon will do it. They'll be the first to do it. Jeffy, send me a check when you do this. But they'll be the first to do it through Prime, right? With one of their limited series. Like, did you watch Reacher? Very well produced. Yeah. Like, they did a great job with that. It was a badass show. And, like, that's how you know they're going to make it. When they bring in quality production execs and, like, they produce a quality show, being from, like, they built, I just don't even know. Amazon blows my mind. Someone asked about it, so I want to talk about it for a second. Like, how do you go from selling books to what they've done? I don't know, but they've done it. And then let's do server side too. And let's do cloud infrastructure. Like, fuck it. Why not? Like, let's do books, cloud infrastructure, produce delivery. Let's just buy Whole Foods. Wouldn't that be funny? And like, they're just laughing, but it works and it works and it works. And guess what? I go to Whole Foods and now it's starting to outpace in terms of pricing Meijer and your Jewel Osco and your other like Walmarts. They're priced better. The quality of product's better. I don't even have to take my wallet. I just scan my little code and it goes onto my Amazon card, which, surprise, also gives me 5% back. I'm not going to get that anywhere else.
Yeah.
Right. Genius. They have locked me in the prison of the ecosystem, and I choose to stay. And so they've crushed it. I think they will be the first to integrate that product-based experience into the programming. Like with their X-ray thing was kind of a glimpse, right? You can go on IMDb and look up actors, whatever. I think at a certain point, you'll be able to do a point and click and buy that shirt.
Oh, for sure. That's just the way. Now that we're leaving
your cart,
TV,
whatever.
Yeah, 100%.
Wish list. I think they'll be the first. It'll be.
No, I agree. Yeah, 100%. But to go off of what David, to give David a conclusion on Roku, Trade Desk is a good comp for them and CTV, as good as it can be. So Trade Desk has a Rule 40 score of...
Ooh, that chart is tender. I like that.
They have a Rule 40 score of 54. Wow. While trading at 85 times free cash flow. Roku has a Rule 40 score of 17. So literally 66% less than Trade Desk, which is like Trade Desk is superior. So they have a premium valuation justified, but still 66% less. And they're trading at 50 times free cash flow still. That just shows, although Trade Desk has 3 times the Rule 40 score as Roku, they only really have a 30% premium valuation against a name like Roku. That, in my opinion, is like, wow, Roku needs to get pulled down more, or Trade Desk needs a higher valuation. Either way, Roku is dead money, in my opinion, unless they can squeeze some free cash flow margins, which I don't think they can, especially with the headwind they have in Vizio. And I just think it's going to go private equity. It's a natural PE firm, in my opinion. So,
and let's do one more for shits and gigs. Let's go Rocket Lab. Let me find the comment. That was to him. Where is it? It's from Twitter. Weird. I'm not seeing it on here. Oh, right here. Chandler Stokes. Let's talk Rocket Lab. So look, we got a position here. We've talked about this one quite a bit. It is an adventurous position, nonetheless, speculative and risk friendly. I would say we welcome the risk because the upside is there. And I mean, to be very fair, we were talking about like the buy here that we took was like 360 to 370, right? So you already got a significant cushion, $1.30 per share margin to work with here. So we did scoop the bottom. Beautiful. Upside, again, the reversion to the golden mean strategy, it is like the most predictable outcome in trading if the company's decent and has somewhat of a future. And that reversion to that mean would put us right at about $14. So our anticipation is 275% to the upside from the bottom we grabbed. Volume's coming in. I'll let him walk you through, I guess, more so the fundamental side. But from a technical perspective, these are your key levels. Just use a simple fib retracement. This is your long-term potential of a total reversal and an explosive growth segment based on either like positive earnings, news development, etc. So the upside here is significant. We took this on the anticipation that if it broke below $3.30, we're out. So we take like what, 60-cent loss for the potential of a $10 per share gain. Give me some of that. 10-1, baby. Get some.
Yeah. So we've gone over the Rocket Lab story like a ton. So I won't be a dead horse, but like, again, next frontier after AI and quantum computing is space economy. Whatever SpaceX is doing for the industry will benefit Rocket Lab. They're not competitors. SpaceX is 100 times the valuation Rocket Lab is. In my opinion, that's not competition. However, SpaceX has evolved into this full space prime, and they're owning the end-to-end process of it now. And if SpaceX is investing all this money and getting all this attention into like the space economy, the infrastructure side, they're putting all the pieces together for a Rocket Lab to get benefit as well in the high tide raises all boats type of situation. So it's been basing for quite some time in the fours. Why is that? Capital markets dry. They're still not profitable. They are doing some financial engineering to get capital to acquire some of their competition because there's a fire sale going on in the space industry where a lot of SPACs came out in the space industry that are nowhere near profitability. They're not making any revenue, and they're essentially going to go bankrupt. So what is Rocket Lab going to do with their cash position? They're going to acquire these assets for, 30 cents on the dollar, knowing that, fine, we'll push our profitability out, which was supposed to happen this year, to end of 2025, because that doesn't matter. We're all about expanding our end-to-end network and expanding our market share in this early innings of this space economy. So in order, people didn't like that initially, and that's why it never really broke out $5. But guess what? Appetite is starting to get more and more towards these risk-on small cap names, these highly secular growth themes, because the anticipation of rate cuts happening in September. They might have 2 rate cuts next year. Like the rate hikes are over with, and I do think we're part of that cycle where rate cuts are going to happen. This repositioning towards small caps might occur in the coming months. If that happens, these IonQs, these Rocket Labs, these leaders in these early innings secular growth themes are going to catch a bid. So you saw that already the past month or so with Rocket Lab catching a bid. If you guys want to trade this name, not own it, like for me and Austin, we are owning this name. Like this is a 5+ year investment. We're owning it, not looking at it at all. But if you want to like participate in this trade, they're holding their 200-day like a champ, in my opinion. There's a huge volume base in the 460 range. If you guys want to like participate in the trade but like have a stop loss, I do 440 as my stop loss in this name. If you guys want, so that's like a good back of the head, like, all right, 440 I'll put down as a stop loss. But if I want to slowly build a position, like I don't know. It's really tricky because this name could go to $10 in an instant because as a 50% CAGR on the top line, they have a duopoly in this early inning space economy that's going to be worth trillions of dollars by 2030. Do the math. This company's worth $2 billion in a duopoly in a $1 trillion plus industry. They're going to be worth a lot more, in my opinion. So I'd be cautious of trading this, not owning it. But again, my 2 cents. So I'm obviously going to be a smash because I think I'm a sucker for duopolies, and they're in a duopoly right now in a very early inning industry, and I think there's a lot of room to run. Like this could be, if someone told me this is a $20 stock in 2026, like I wouldn't be surprised just because of the position they have in this economy.
Right. 100%. Let's do one more. All right, fine. We'll do fine. We'll look at the earnings. Fine. Somebody asked about looking at SoFi earnings anticipation. Again, we've talked about that one, and like, to put SoFi next to PayPal and Roku, like you had the world on a platter and you shit the bed. But let's take a look. I gotta take a look. Okay, they are turning net positive, so I understand that sentiment.
I mean, I'll reiterate.
So there is a flip if we're looking at most recent beat on net positive earnings. Go ahead.
No, sorry. There's a lag for some reason right now. So you go because I think it's breaking up on my end. Does it work?
We've talked about how they've just failed to capitalize on doing what. Can you hear me?
Yeah, I can hear you. I can add a row. Yeah, it's
there now.
You can hear me. It's a bank stock with tech features. That's what SoFi is. So what do you value a bank stock? It's a 1.5 price to sales. They're around that right now. Fine.
By JP Morgan.
But, like again, why invest in a bank stock when there's these growth thematics that are once in a lifetime, like AI, like quantum computing, space. It's just like, don't catch a falling knife. Like this is a reason this name is consolidating. Like I think it's look at Robinhood. Like I know it's different business, but not really. Like their go-to-market products, the way they market it is chef's kiss. That's what you want. And a new company, like a neobanking, that's kind of disrupt the dinosaur of a financial industry. Like you need exciting marketing. You need some exciting go-to-market products. SoFi is missing that. And in my opinion, for to have a moat in neobanking, which has minimal moats, like it doesn't take much to like, it takes a lot to stick out. Like you need that UI experience. You need that marketing. Robinhood has that. SoFi's lagging that. Maybe they have their hands tied for some reason on like their banking license that's prohibiting them doing these like exciting new features. I don't know what it is. Something's missing. So until SoFi really breaks above $10, in my opinion, like I don't know if it's going anywhere. And also, I wrote this off like as like that's a bank stock with tech features, and I'm not interested in that in my portfolio for growth stocks. So maybe I'm outdated, but I just don't think that's a place to be.
Agreed. All right. It is, holy shit, 6:50. Damn, dude. We just get going and you just don't even realize it. It's game time. So we're going to wrap this up. We love y'all. Stay blessed. You got it all now. Make some money. Follow what we're doing. You can find it His Twitter username's right there, X, whatever. I'm never going to call it that. It's just Twitter, whatever. Stocks Heavy Shy. You can follow mine on the Penny Boys account or mine at the Big Quench. The Discord link, once again, is everywhere. So just go find it. He's got the link in his bio. Go get that free access right now so that you can have the best possible research in front of you and make the right decisions, man. Make you some money. Let's make you a couple grand a month. That's all I want for you. Let's make you a couple grand a month. It's not that hard. You could do it with a couple $100. You could turn that into $1,000 a month. I've seen people do it a million times over with a little bit of effort, a little bit of shoe shine. So love y'all. Stay blessed now. Bye-bye.